Evening, everyone. Stephen Cooklin, Chief Executive Founder of Manolete Partners, PLC. The feedback forms you get from these things, half the people say, why did you spend a couple of minutes explaining what your company does? Of course, we know what your company does. The other half say, why didn't you spend more time on that? So in the interest of leveling up, I thought I'd just do first quick couple of slides explaining just basically what we do. So we were founded in 2008, and what Manolete does is buys litigation claims from insolvent companies in the UK. Insolvency is the only area in the law where you can actually buy the actual legal action. And very broadly, lots of variations around this, but we pay about £5,000 to £10,000 for each claim. We then pay the legal costs of running the litigation. By far, the majority, about 97% of our cases, end before we get anywhere near a dreaded trial. And when we get a recovery, we get those costs back, the £5,000 to £10,000 in legal fees, and then we split the rest roughly 50-50. The kind of claims we do, summarised on here, this is all on the website if anyone wants to look at it. So the kind of things we're doing is really, it's UK companies and it's directors who have done pretty naughty things. So I'll talk about 2 or 3 of the biggest ones. So directors' loan accounts. So a lot of SMEs, small, medium-sized businesses in the UK, their accountants will say, look, pay yourselves a minimum salary, £8,000 to qualify for UK pension, but then run your lifestyle through the business, your kitchen, upgrade, your holidays, your Arsenal season tickets, run that through the business. At the end of the year, the business can declare a dividend and wipe out that loan to the company. And that's all fine and actually legal, very tax effective. But the problem is when the business isn't generating profits and then ultimately becomes insolvent, that money is owed back to the company by the directors. And they seem to think because they own the company, they can get away with that. Well, they can't. So that's a typical one. Another typical situation that we see all the time is a company, maybe a tech company, a medical company, comes up with a new product, does very well, makes a lot of money, and then something terrible happens, even from a taxation perspective or a competitor, and they move the business to a new company and they leave all the liabilities in the old company and pull the plug on that. That's usually HMRC and the window cleaner not being paid. And they paid maybe £1 for this business that was maybe making a couple of £1 million profit in the past. So that's called a transaction under value. So we go after them. So it's basically lots of mini kind of Bob Maxwell's coming around in the UK, and there are an awful lot of them, actually. The main creditor who's left behind is HMRC, because these directors and the accountants aren't stupid. You don't have to pay your PAYE for a little bit, you don't have to pay your VAT until the quarter, don't have to pay your corporation tax till later. So they tend to leave HMRC as the biggest creditor in these situations. But when we say HMRC, that's all of us. That's our taxes, that's our schools, that's our NHS, and this is who they're effectively robbing from. One of the great things about buying these claims, and this is a big differentiation between Manolete and the other listed companies, but probably some of you either shareholders or have heard of people like Burford, Litigation Capital Management, Omni Bridgeway in Australia. They only fund someone else's claim, and they have to do it that way. They can't take control of the claim. So the big difference with Manolete is we are the claimant. We bought the claim. And that means the lawyers who are on the case report to us and us only. If we want to pick up the phone to the guy on the side, the director who's nicked all the money, we can pick up the phone. I can pick up the phone. One of my colleagues can pick up the phone. They can come and talk to us and say, well, should we have a sit down and sort this out, rather than paying lawyers lots of money. And this is what happens all the time. And so having control of that process means that the durations of our cases are very, very short, about 12 months. In the UK, there are about, pre-pandemic, there were about 18,000 companies going bust every year, and about 2,000 claims being run out of those companies by liquidators. Manolete was running about 200 claims, so about 10% of the market. What happened in the pandemic, we'll get into this in a little bit more detail in a minute, is the government suspended insolvency laws, which wasn't really very helpful in my business plan. So the number of companies going bust was just frozen because it was impossible to push them into insolvency. Now that all changed back to normal, happily, in April of 2022. And what you'll see is that there's been a very large increase. So this is where we were pre-COVID, about 1,000 cases a month, dipped down by about 40%. And then as you can see here, as we come out of COVID and the laws come back, we're way above where we were before. That's for lots of reasons. Number one, well, these companies that should have gone bust now are going bust. And very happily for us, in stark contrast to the last presentation, interest rates, inflation, energy prices, suppliers, can't get the staff, absolutely marvellous for us. Love it. So the market is there's about £750 million worth gets recovered in insolvency claims every year. Now, if you go back 14 years ago, before we arrived, this was all blue. This was all lawyers working on a no-win, no-fee. Liquidators find a lawyer, say, right, Mr. Lawyer, you do the work. If you don't get anything back, we won't pay you anything. If you get anything back, pay you double. So, of course, what happened? On the rubbish cases, lawyers did no work and didn't really lose any time. On the good cases, they made them last for 5 years, as long as they could take us the house and the car and the kids' education off these poor directors. It was quite appalling. Government assigned Lord Justice Jackson to look at this. Jackson reforms came in and made it very difficult to do no win, no fee. So if you look about 5 years ago, third-party funders, which is the heroic companies in the yellow here, were about 5–10% of the market. This is growing all the time. And the biggest player in the yellow heroic bit is Manolete Partners. We are 67% market leader. Next highest is 5%, 4%, 1%. And the mission is to turn the whole cake yellow, of course. We are the big daddy of it, so won the industry award 5 times. The Chambers, very well-heeled league tables by the legal community. They have these bans. The only company in band 1 for insolvency litigation is Manolete. The returns are pretty stunning. You see here, IRRs, internal rate of returns, 130%, and this is like almost every year, 462% there. So very, very high returns. When I was in investment banking, venture capital, private equity, a good return would be 25%. So no one's seen these kind of returns before, but in insolvency, you can pick up stuff cheap. On that. So, as I said, that's how the number of insolvencies has changed over months. This is our number of inquiries. You'll see it's the same shape of curve, very high growth until COVID hit, and here we are now, well above pre-COVID. And then if you go into that on a quarterly basis, this is what's really quite exciting happening at Manolete. So that's that graph broken down, IPO there, grow, hit the brakes, COVID hits, laws changed, oh God, what's happening? Laws back to normal and through the roof. So that is great to see. And this is the cash. So even though we've been hamstrung with those legal changes, the cash that came in to the business last year was up 72% to 26.7 million, of which we give half roughly to the creditors. So we keep 13.1 million there. Our overheads in cash terms are about 5 million. So we generated a lot of cash in this last financial year. We reinvested about 6 million of that excess. We paid down some borrowings of 3 million. And again, that was all done on cases where COVID had been an issue. You can imagine how difficult it was for my people trying to get directors to sit down and sort out these cases. Oh, I've got a bit of sniffle, I need to go and get a COVID test. Oh, my wife's ill. Of course, these are, tragic circumstances, of course, but to be hitting records amounts of cash coming into the business was, I thought, a great achievement by the team. Is that 10 minutes for the whole thing, or
just for your presentation, Steve?
Thank you. Rushing. So, so there's your 26 million and generating before investments 7 million there. Cash again, like talking about cash. So current trading, this is interesting. So we ended the year on with very strong momentum. The first half was fairly tragic because we're still coming out of that COVID suspension. But the second half of the year was stratospheric. We signed 180 cases in the second half of the year, which is more than the whole of the previous year. So in 6 months, we did more than the previous 12 months, which is kind of like an internet company, really, isn't it? Number of year investments was 263 cases. So I think number of business days in the UK is about 265, isn't it? Something like that. So every single day, the team were making new investment, 65% higher. Remember, and that is with a really moribund first half of the year. New case inquiries, 50% up. Completions, 193% up. And the size of the cases, the first companies that fell over after the insolvency laws came back and the interest rates started rising, the so-called zombie companies, very, very weak companies, can't even pay their interest. And this is why the question of this gentleman was so very clever. Because if you can't pay your interest at 0.5%, you've got no chance of paying your interest at 5.5%, 6%, 6.5%, wherever it's going to go. So very exciting for us. We love high interest rates. So the bigger companies just naturally get knocked over as this tsunami of economic plague hits them now. Then looking into this current financial year, so we're looking at now April and May this year, the number of cases is already 154% higher than it was last year. This gets old so quickly. So we've already signed 97 cases in the first almost 3 months of this year. So we are well on track to double yet again. Cash keeps on coming in. In just 11 weeks, 3 million of cash. We're adding to the team 2 new financial analysts, 2 new expert insolvency lawyers. You might have heard about this Barclays opportunity. So Manolete's a £100 million market cap company. We're tiny compared to Barclays. We were approached about 9 months ago by Barclays to say, look, we've heard about what you do. Rishi Sunak, when he was Chancellor, put out all these bounce back loans, 50 billion of our money as in 50,000 loans to SMEs with very, very little checks. So you might remember the House of Lords chap, the counter-fraud supremo of the government, Lord Theodore Agnew, resigned, slammed his red book down and walked out of the House of Lords, said, this is shambolic, it's all being stolen. And they're little chunks of money, 50,000. You put a lawyer on that, he'll spend that within a couple of weeks. So they came to us, and we started doing a pilot with them of 120 companies to put them through compulsory liquidation. They hadn't paid a penny back of these bounce-back loans that were Barclays customers. So as soon as we did that, and Barclays said, right, we're going to compulsory liquidate you, a whole bunch of them started paying Barclays immediately. Just the threat of facing the bullfighter. Loved it. Now, we didn't get anything out of that, but holistically, it was a great start. Then it went through the other more difficult cases, went through the process, came to us. We signed up 48 last year, another 20 this year. And we've generated hundreds and hundreds and hundreds of thousands on these pilot cases. Barclays cannot believe it. So they sat us down with the British Business Bank, and the entirety of the financial services industry was on this massive screen of us telling them about what we'd done, because they've also put a huge amount of bounce-back loans out there. So the one disappointing thing is that others, Lloyds, Santander, HSBC, haven't copied Barclays yet. They said, oh, we need to spend more time. Barclays are completely convinced. The recovery rate before they used us was less than 0.1% of bounce-back loan recoveries, and they got that back instantaneously. The cases that come to us, the average time period has been 6 to 8 weeks. So we're hopeful this will develop, but by God, it's political when you get involved in British business banking, etc. But that minister who resigned in the House of Lords now works for Manolete, so of course he does. Cartel cases. So final special unit. So this is very, very different. Okay, bright idea we had about 4 years ago. What the EU had said is between 1997 and 2011, quite a long period of time, the people, the manufacturers of rather large trucks, 6 tons and above, in Europe, had been fixing prices, ripping customers off. So we thought, what if you were a company that's quite a big one, has gone bust since that time, and would have had a claim if you'd still be around? We'll buy that claim. So we literally dug companies out of their kind of graves, effectively, and resurrected them. CityLink, Comex, remember Comex, of course, the electrical retailer? And so we resurrected these companies and then bought the claims. So we've got 22 of these claims, all ready to roll, being issued, and the judge said, the Competition and Appeals Tribunal said, right, we're going to freeze everything there, and we're going to look at 3 waves of test cases. So the first were BT and Royal Mail, huge companies, identical claims. And the judgment came out on that in January, very much in their favour, supported completely our net book value of 13 odd million. The second wave of cases, the Ryder Group immediately settled. We don't know what for, but all the numbers were in the judgment. The third wave are coming through. And the reason why they're settling, of course, is DAF and Renault and Daimler and Mercedes, they can't defend the indefensible now, and it's costing them a huge amount of money. They'll be looking at a legal bill of adverse costs, so claimant costs of hundreds of millions of pounds. Here, Royal Mail were awarded £9 million. BT were awarded £5 million, 75%, and their own costs. So we, little old Manolete, got 22 of these, and we're just tucking in, completely opposite to our usual business, where we're kind of ramming home the sabre as soon as we can. These we're just tucking in behind these massive, expensive claims, and we'll just kind of put our claim in when the dust has settled on the battlefield. But it's looking very good indeed. I won't go through the final. Usually our CFO does this on the website. He does some excellent analysis, which I won't go into here, about breaking down that first half of the year where we're still coming out of the COVID problems, second half of the year, which was much more profitable and back to normal, which was terrific. And yeah, maybe I could move to questions if that's okay.
Okay. Okay, gentleman here, please. I've not asked one yet. Question start with you.
Thank you. It's a fascinating business. It would seem to me, though, that you would need a lot of very highly qualified staff. And I wonder whether you could perhaps tell us how big your operation is.
Fantastic.
And to what extent human resources would be a challenge.
Excellent start of the questions. So very high quality, not particularly high quantity. So we've got 16 in-house lawyers and three financial analysts, about to become 5, who are managing. Currently, we have live 350 cases. And you think, well, how can these people manage so much? Well, the operational model is very distributed. They are reviewing the cases for the investment committee, myself and the most senior lawyer and the CFO to sign off on. But once we've bought the case, the actual, hopefully no lawyers are in the room, donkey work of drafting up the claim, getting the bundles together, paginating, is done by an external law firm, whose fee we fix because it's our claim. And if they go over, we say we don't pay for that. So any one lawyer within Manolete at any one time can manage about 30 or 40 cases, because a real hard graft is being done externally. If cases get bigger and more serious and go longer, then, of course, a barrister gets involved as well. But again, they're doing the hard graft as well. And so the role for a Manolete in-house lawyer is really a project manager role, a bit like what I used to do in investment banking. We never did the accountant's reports. We had accountants. We never did the legal back end. The lawyers did that. We just orchestrated. So I've copied that model in Manolete, and it works pretty well.
Question over here, please. Sorry, Steve.
Hi. I mean, as an accountant, I tend to look at the the company accounts, and I think you made a loss for this year, ending 31st of March, 4 million of pre-tax losses compared to 4 million the previous year. And I believe that was due to a big case that you had to do a write-down. So even though insolvencies are increasing and there's less restriction on insolvencies from the government, in any one given year, a large case which goes wrong could turn a profitable year into. So
I get your point.
How is it? It's difficult to
we've been around for 14 years. 14 years. Okay, we've had 2 cases of any materiality we've lost. 2. John Morton, who's our biggest investor, the godfather of venture capital and private equity, and probably the cleverest man I've met in my entire career. If I'd said to John in 2008, here's a business plan, litigation funding and insolvency, and over a 14-year period, I've assumed 2 losses. What would John have said to me? I'm an accountant, Philip, what would you have said to that business plan? Having invested in over 1,000 cases, what would John have said to me? He would have said, go away, now write a business plan where you're losing 10% of the cases, of course. It's miraculous what we've achieved and what my team has achieved. It's litigation. The returns are stratospheric. Why? Because there is risk that now and again, literally a blue moon event, a black swan event, twice in 14 years, this will happen.
You mentioned that Litigation Capital in Burford, who are pure financing companies, every case they probably make money from it because of the financing fees. Whereas with Manolete,
that's just not true.
It's almost like premium bonds. One year you might win.
That's just not true. That's just not true. That's just not true.
Finally, we've got time for one more here, please, this gentleman.
If I could raise the issue of the Barclays deal with the business bounce back loans, is it? Hopefully, we're not going to have another COVID. So hopefully, we're not going to have that sort of scenario happening again. Going into that bit of the business, are you sort of building up a business that's going to die?
Oh, interesting voice. Yeah.
Barclays and the other banks as an opportunity to get a bigger market share on your overall business.
Yeah. Okay. Let me come back to that in a second. It's just one data point for this gentleman. Okay. Lionfish, the funder within Rosenblatt, invested in 10 cases. The first 2, how much they have to write off in their books? £4 million. Their first 2 cases. Okay? And they are a funder. Okay. Omni Bridgeway, same. Litigation Capital Management, same. Burford, same. I know these companies intimately very. Bounce back loans, separate business unit. We've got a plan. If it were to go to thousands of cases, and I'm not going to say it in this room because I don't want anyone to copy it and offer it to NatWest and Santander and all the rest of it, we have a very bespoke plan ready to go if we get that level of demand that's totally variable to the demand that comes in.
Okay.